Hey, what's up traders? This is Taylor with your free video for Friday the 16th of September. Hope you are all doing well. Hope you had a good week. And yeah, we got a lot to cover here. So the way that I see it, guys, the Bulls have got some serious work ahead of them next week. Or I think from here we're going to head back down towards the June-July lows. So a couple of things to note here on the chart of the S&Ps. And you know, we did come into the week here with the Bulls having made some pretty good progress. So you get your little bear trap back there. You get your 3 to 4 day short squeeze, and it takes you back above your 50, cranking out a couple closes back above the 21 EMA. But then, of course, you get the spanking on Tuesday and a bigger gap down here today. So today's gap down, in this combination that we're going to discuss here, you're seeing it throughout the market. The S&Ps, the QQQ, your Amazons, your Apples, where today we get the close under key support. Now, for the market and a lot of names out there, there's not too much technical support until we're back down here at the June-July lows. So today you get the gap down in the close under key support, which for the S&Ps is 390, but you also get this negative cross here with these moving averages. So when the 21 EMA crosses under the 50-period simple moving average, these bars go from blue to gray. So to me, all that really means is just further confirmation. Trend, structure, momentum, all kind of points towards the path of least resistance being to the downside. So we got a couple short positions open right now. On the SPX we've got, and we opened this trade I think a couple of weeks ago. On the SPX we have some October expiration call credit spreads up here at 4,100. So for now those are in pretty good shape, and we took a small nibble here today on some October expiration QQQ puts. And you can see the Qs are actually in a little bit worse shape than the S&Ps, where you also get that close under support. You also have the negative moving average cross, but you'll notice the red arrows there. That's the big 3 sell signal. So to me, that's basically like the ultimate combo as far as we probably want to be short. Until further notice, the negative cross plus the big 3 sell signal makes for some pretty good shorting. So heading into next week, guys, here's how I see it. The Bulls have got a lot of work ahead of them, or I think we've got a pretty quick express route for a move back down towards 370-ish. So the level that I think you should anchor to heading into next week for the S&Ps is going to be 390, and for your Q-tips here, you want to anchor to 290. So my thinking is QQQ under 290, and your S&P under 390. You want to be short. Now, for what it's worth here, we are a little bit oversold. So like any market, when you get this oversold, there is the potential for a bit of a bear trap and a bit of a short squeeze. So under 390, I think you want to be short. And for what it's worth, I think even above 390, you want to continue to build your short position. But I do think for next week, the only shot the Bulls have got here, to avoid a further plunge, is to get back above support, get back above 390, hold above 390, and then actually start to put a little bit of pressure on the shorts and trend a little bit higher. Under 390, I think you can have your puts, your put debit spreads. If we can get that break above 390, you can watch something like an hourly chart. The thing about a bear market is when you get those short squeezes, it can really open up a good 2 to 3 days of opportunity to play the market to the upside. So what I'm not a huge fan of is marrying your thesis, marrying your idea, which I suppose my idea is that we're going to go down towards 370, 360. You don't want to marry that idea to the extent that the market rallies for 2 to 3 weeks, and just because you have this bearish mindset, you sit back and take it on the chin. So what is nice about a volatile market is, obviously, if you get short on the break and you catch that flush, it's going to pay you pretty handsomely. What's also nice, though, as far as playing some defense, in these volatile markets, when we trap the shorts, those kickback rallies are so explosive. So the thinking here is we want to be short under 390. If they can set the bear trap, rip the market back above 390, and then you start to see signs we're going to trend a little bit higher, I think you could look to, I would say still keep your short position, but I do think you might want to entertain the idea of trying to flip long and play that bad boy to the upside. And as far as your upside target, a good oversold bounce could take you all the way back towards your 21 EMA. So there's a few levels for you guys heading into next week. Under 390, I think pretty quickly we could head back down towards 370. If they can ripper back above 390 and hold it, we could get the short squeeze and the reversion to the mean back towards 400. Bigger picture though, if we've got sell signals and negative moving average crosses on the daily charts, I think we are heading lower. So we'll check out a few different names here, but it's a lot of the same. So Apple, for example, and obviously a really important stock, being that it is heavily weighted, we are 2 days into that negative cross. And of course, today you get the close under your key support. So that looks troublesome. We get the big Amazon here. We don't quite have the negative cross just yet. We're getting pretty close. But that closes under support. And then if you look at the semiconductor sector, a lot of ugliness here, guys. So a lot of pressure from the top down. And where we're at right now is basically, short squeeze or bust. The structure is totally, broken. So we're not going to trend higher here based on, technicals and pretty buy signals. I think the only shot the market has of trading higher is to trigger that short squeeze. Get everybody leaning a little bit too short. Wipe them out for a bit. And from there, we probably do roll over eventually. But for next week, I think you focus on the over-under game. Under 390, you want to be short. Back above 390, you might want to be open-minded to flipping long for a little bit, potentially for a pushback towards 400. Under 390, door is wide open here for a pushback towards the June lows. So a shorter video, guys, but as goes the market, goes a lot of the stocks. So take that mindset here that I'm explaining for the S&Ps and the QQQ, and you can pretty much apply that to any major stock. Your Microsofts, your Apples, etc. As goes the market, goes most of them. So I would imagine if the bulls can't get something going quickly back above 390, I would, certainly expect more downside in your Nvidias, your Googles, Amazons, Apples, and I do think maybe eventually Tesla. So keep a really close eye on this one heading into next week. For now, this is definitely your leadership. And just super, super strong when you take into consideration the flush you saw in the market this week. So the difficulty here is, this does look pretty good. We got a daily squeeze, we got good support. It's the kind of thing I would typically like to trade to the upside. That all gets a little bit trickier when potentially I'm looking at a market that I think might be headed down pretty good. Pretty good chance, best case scenario, maybe Tesla just flops around for a little bit. Now in the event you actually get the short squeeze, the S&Ps are back above 390, the QQQ is back above 290, then I think you definitely look for something like Tesla to lead the way higher. Might be the easier trade, as opposed to actually trying to buy the calls on the S&Ps or the QQQ. But there you have it, guys. A little bit of bigger picture mixed with the shorter term. I think we've all kind of known for a while. The structure and the trend of the bigger picture timeframes has all kind of pointed towards, continuous downside. As we play the Monday ebbs and flows, things can obviously get a little bit nasty. But I think you take today's close under key support. I think you take your negative moving average crosses, and for now you look at that as a structure that wants to trade much lower, unless the bulls have got something up their sleeve. But as always, guys, I hope you found this helpful. For those of you in the trading rooms, I will see you bright and early on Monday morning, and for the rest of you, have a good weekend, guys. If you haven't already, go on ahead and subscribe, and we will talk to you in the next one.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.